Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space.
7,300 crore rupee initial public offering witnessed a robust demand on the second day of bidding. Overall subscription is now nearly 2 times the shares on offer. This was led by retail portion, which was subscribed by over 3 times, followed by the portion reserved for the QIB, which was subscribed 1.64 times as of 4 p.m. today.
SEBI has approved Shiprocket's 2,400 crore rupee initial public offering. Sources tell CNBC-TV18 that the courier delivery firm's IPO will be equal parts of fresh issue and an offer for sale. Marquee investors Temasek, Zomato and InfoEdge will not sell their stake. The offer for sale will be made solely by early investors and the founders.
Brokerage firm Grow has received bids worth 50,000 crore rupees from large domestic mutual funds and foreign funds for its anchor book before the IPO opens tomorrow. Now, sources say the anchor book is estimated to be around 3,000 crore rupees and has been oversubscribed more than 15 times.
The 3,900 crore rupee initial public offering of Pine Labs will open for subscription from November 7 to November 11. The fintech company has set the price band in the range of 210 and 221 rupees per share. The IPO comprises a fresh issuance of 2,080 crore rupees, down from 2,600 crore rupees in June. IPO size is cut, but growth plans stay intact, Pine Labs CEO tells CNBC-TV18.
Gaming and entertainment platform Zupi has acquired Australian AI startup New Canon. It strengthens Zupi's expansion into AI-powered interactive storytelling, extending its ecosystem beyond social gaming.
Well, those were the headlines, but the big news we're tracking today is Shiprocket's 2,400 crore rupee IPO, which has received Securities and Exchange Board of India's approval. Let's get to the details now. Shiprocket has received SEBI's approval for its 2,400 crore rupee IPO. The e-commerce enablement platform, which supports D2C brands and small sellers through its full-stack tech infrastructure, had confidentially filed in May this year and will update its draft prospectus soon. Around half of the issue will be a fresh capital raise. The company's emerging business that includes cross-border shipping, marketing technologies and omnichannel logistics is growing, and to strengthen its leadership, sources tell me that Shiprocket plans to raise 2,400 crore rupee through its upcoming IPO, evenly split between a fresh issue and an offer for sale. Some of Shiprocket's larger backers, including Temasek, Zomato and InfoEdge, are sitting out of the IPO and will not be parting with their stakes. The offer for sale will be made solely by early investors and the company's founders, who will be selling stakes partially. My source also tells me the company plans to invest the fresh capital in its emerging businesses, which now contribute to around 20% of the overall revenue. For fiscal 2025, the company reported a 24% increase in its operating revenue to 1,632 crore rupees. The Gurugram-based company also reduced its net loss to 74 crore rupees in FY25 from 595 crore rupees in the previous fiscal. Now, driven by revenue growth and lower exceptional expenses, the company attributed most of the losses to ESOP expenses of 91 crore rupees. Also on what's brewing, Bengaluru-based Optimo Capital has raised 150 crore rupees in Series A funding, led by its founder and MD Prashant Pitti, with backing from Bloom Ventures and Omnivore. The fintech NBFC uses AI and digital land records to cut property loan approvals from weeks to hours and has already built a 350 crore rupee loan book across 56 cities. To talk about how property-backed lending could unlock India's biggest untapped assets, its land, joining me now is Prashant Pitti. Prashant, welcome back to Startup Street. You recently stepped down as managing director of Ease My Trip, saying you wanted to focus on mentoring startups, urban traffic solutions and new ventures. Now with Optimo Capital raising 150 crore rupees, you've made a bold pivot from travel tech to fintech lending. What gap, Prashant, did you see in the loan against property space that traditional lenders or even other fintechs weren't addressing?
Well, firstly, thank you for having me on the show. And of course, it's a big step. And, this big step was basically fueled by the data and conviction which I was able to build in the last 2 years of running Optimo Capital. See, any country's biggest asset is its land and property. For India, 53% of our land and property, our assets become land and property. However, in our country, the mortgage to GDP ratio is less than 9%, while for all other developed nations, it is above 50%, which means that we are not utilizing our biggest asset to grow our GDP. This statistics itself was enough for me to build the conviction on creating a digital journey for loan against property. Currently, most NBFCs and banks have digitized the unsecured business loan or personal loan journey. At Optimo, we are digitizing the journey of giving loan against property to businessmen.
Prashant, you've highlighted that nearly 75% of India's 4.8 crore small business owners lack a formal credit history, yet they own property that often sits idle as an asset. How is Optimo helping them unlock that wealth to fund business growth? If you could take us through your tech stack, how are you compressing approvals to just hours and disbursals under a week versus the traditional 4 to 6 week cycle?
We have picked up the right states to do it. The southern state, which is Karnataka, Tamil Nadu, Andhra Pradesh, Telangana, they have digitized their land record. Now, using those digital land records and building a proprietary AI-enabled technology on top of that, we are able to give in-principle sanction letter within hours of person applying. To be able to do that, we need to check what is the valuation of the property and also what is the title check of the property. Remaining all things, the CIBIL check, account aggregator, and the other things were already built in. Now, using our AI tech and the massive database of digital land records, we were able to crack it. And now we are able to offer in-principle sanction letter in a matter of few hours to the customer.
Prashant, you've made borrowing as simple as sending a WhatsApp message. Tell us what kind of adoption are you seeing from smaller towns and first-time borrowers through that channel?
So we have started the channel, which is a WhatsApp number. I don't want to promote it right now. Rather than, I just say there's a WhatsApp number which is available on our website. People can just message on that number. There's a QR code which is available. We are basically promoting that QR code which people can just scan, and immediately after scan they will land to the WhatsApp page. And over WhatsApp they can just have a conversation with our chatbot. And in that conversation they are just sharing the information which we need. It's a 5-minute information. And just like you would give your address to Swiggy, Zomato, or Blinkit, quick commerce companies, you would just give us your address. And on the basis of your address and your information, we will verify whether you actually own that property and what is the worth of that property. And on the basis of that, we will give you in principle sanction letter in a matter of a few hours.
Okay. Now, Optimo Capital has built a 350 crore rupee loan book in 18 months, expanded to 56 cities, and has been profitable for over 15 months. Prashant, tell us what's driving this operational discipline and early profitability.
Well, most of the operational discipline is coming from my experience at EaseMarket, which was also bootstrap profitable since the month one. Optimo is also profitable from second month onwards. It's been 15 months of consistently running profitable company. Most of it is coming from the technology which we have built in, which we are able to utilize, unlike any other banks or NBFCs, and also the discipline of running a very financial prudent company. Plus, the other thing which is happening is that the word of mouth is spreading very fast, where people are realizing that Optimo Capital is giving sanction letter much faster compared to any other, and which is why a lot of customers are coming by themselves.
Prashant, India's mortgage to GDP ratio is just 9% compared to over 50% in developed economies. That's a massive gap. In fact, the mid-ticket loan against property market is pegged at 22 lakh crore rupees, with only 28% being served today. So what's Optimo's roadmap to capture this wide space, especially as you move deeper into tier 3 and beyond?
See, what we have done is we have created a tech company, and that tech company owns the NBFC. So, of course, right now we are in the process of building our own book. But however, very shortly we will allow others to use our software, our AI system, and our database to basically offer loan against property for their customers. We would allow banks and NBFCs as well to use our system, because in order to meet this massive gap of 22 lakh crore, just one Optimo Capital will not be enough.
Absolutely. So one final question. If you were to look 3 years ahead, what's your vision for Optimo? Do you see this becoming the default way for India's MSMEs to borrow against property, and any growth targets that you can share with us?
If there is one NBFC space which is left, almost untouched at this moment, it is loan against property. It is done in a physical way for far too long. And Optimo is over here to redefine that. 3 years ahead, we would want to be known as the pioneers of doing digital loan against property. And I believe that in future, even the lien market and the mortgage will also become online. Once they become online, then this entire journey will truly be digital, where customer,
Yes.
while sitting at his home, can get a loan against his house without even moving an inch, and his house is already mortgaged to an NBFC or a bank. So
All
that is
right.
what I am looking forward in the future.
Okay, on that note, it's time for me to wrap up our conversation. Prashant, many thanks for joining us on Startup Street and wish you the very best.
Venture debt firm Stride Ventures is stepping onto the global stage. The fund has raised $300 million from global institutional investors, including sovereign funds, banks and asset managers, and is now eyeing a $600 million close across India, the GCC and the UK. With over $1.6 billion committed to more than 200 companies so far, Stride is emerging as a key bridge for innovation capital, connecting Indian entrepreneurship with global funding and setting new benchmarks for governance, scale and sustainability in venture lending. Joining me now to discuss this further is Apurva Sharma, the managing partner at Stride Ventures. Apurva, thank you so much for taking time out and being here with us on Startup Street. You know, Stride Ventures has raised an impressive $300 million from global institutional investors, right? What does this milestone mean for your vision of building a truly global innovation capital bridge from India?
Thank you so much for having us on this, series. We are very excited about this achievement because Stride Ventures had this vision of becoming global and mostly the largest player in sponsor-backed credit globally, because today all sponsor-backed credit players are largely regional in nature, which essentially means that companies and startups which are scaling beyond borders, it becomes very difficult for them to kind of prove their credit worthiness across regions and raise money in different currencies. So Stride is that player that will become the largest global sponsor-backed player, sponsor-backed credit provider, and we'll be able to do cross-border, synergies in INR, US dollars, as well as sterling.
Sure, and you're targeting a $600 million close across India, the GCC and the UK, right? How are these markets sort of complementing each other in Stride's global expansion strategy? And when do you hope to, close this?
Sure. So this is across 3 funds. We do expect to close it, by March, April of next year. In terms of closure for all these 3 funds in India, GCC and in UK. The reason we have selected GCC is because the policy is very supportive. The economy is diversifying from oil economy. There's a lot of support and focus on really boosting financial services. Debt as an asset class has evolved beautifully in the last decade or so. And there are very few players who have entered that region. There's a lot that can be done, a lot of interesting structures. So we see it as a first mover advantage. And we see a very, very strong deal pipeline in GCC. In UK, we think that there is scope for players in the sub 15-20 million range. Of course, there are global private credit players that are operational in UK and Europe. But in the sub 15 million range, there is a gap. And there are not enough players backing that ticket size, which is also very key for any sponsor-backed credit player.
Sure. And Stride has already committed over $1.6 billion to over 200 companies, right? If you could take us through what kind of sectors or themes are showing the strongest demand for venture debt globally right now?
So this has a very regional nuance also to it. So in India, the biggest sector in terms of quantum of deployment for us has been consumer, because of the inherent working capital need, capex, the fact that they have to hold inventory, there is offline presence, so that you have receivables from offline players, modern trade players, etc. So working capital is a very important use case for consumer companies. The second important sector for us is fintech or financial services because of FLDG requirements or onward lending, book building, etc. And the third important sector for us has been clean tech, essentially across OEMs, battery recycling, battery swapping, because of the capex-oriented nature of the industry. So these 3 sectors are the most prominent in India. In GCC, the most important the sector which has the maximum amount of credit requirement is fintech and financial services, because it's evolving there in a big way. And there are multiple facets of fintech companies that are evolving in the GCC. UK, it's more, I would say, tech and enterprise SaaS kind of companies because of the nature of companies that thrive in these regions.
Sure. And how do you see your AUM shaping up over the next year? And what does that signal about investor appetite for private credit and venture debt out of India?
Sure. So, we expect the AUM to grow significantly now that we have funds in GCC and UK also. And from the UK fund, we will be able to do a little bit of Europe investing also. So we think it will grow leaps and bounds from here on. Also, with respect to access to capital, the fact that the 300 million is largely from sovereign funds, asset managers, corporate treasuries, they have, deep capital. And it essentially means that the future fundraisers can potentially be bigger, which will essentially result in a higher AUM. And we also see a lot of interplay in the UK, Europe, India corridor, as well as the GCC India corridor. We are already seeing a lot of Indian companies choosing GCC as a natural hub for organic extension.
Sure, and Stride is among the few Indian firms to also voluntarily align with the UN-supported principles for responsible investment, right? So how is this ECG commitment influencing your investment approach and governance model?
So essentially, we are trying to inculcate this in our portfolio companies with respect to what are the parameters that we want to monitor. And as a UN PRI signatory, there are lots of different parameters with respect to obviously using renewable sources of electricity, with respect to less wastage, with respect to equality, gender equality, etc. So we are trying that we inculcate the nuance of measuring those parameters, because a lot of early stage companies don't really look at monitoring a lot of these parameters. But if you can train them and guide them to capturing some of the basic metrics, it helps you be a responsible investor. And also it is a mandate now with a lot of global AMCs. When LPs look at you, when sovereign funds or DFIs look at you, they will expect you to be a responsible investor.
Well, being a responsible investor. But, if you could quickly tell us, we're running out of time. From an India perspective, how do you see Stride's growing global network helping Indian entrepreneurs scale internationally? And what kind of companies are you looking at?
Sure. So in fact, we've already seen a lot of Indian companies, who are building from India for the world, right? Now, when they open a subsidiary in the GCC, UK, US, Europe, they will need access to capital in US dollars or sterling, etc., apart from INR, which is their base currency, where the holding company would be there, or say the expense center would be there. So it has helped us attract a lot of different kinds of deals, who are actually truly global in nature, and founders definitely prefer somebody who can help them go cross-border, and also help them with relationship coverage globally,
Sure.
right? So we can connect them to VCs or private equity investors or banks in those respective regions.
All right, Apurva, thank you so much for taking time out and being here with us on Startup Street.
Thank you so much. Pleasure is all mine.
All right, up next, we're going to take a short break. But, coming up after that, fintech platform SalarySe has raised about $11.3 million in a Series A funding round. We'll put the founder on the hot seat when we return. Welcome back. You're watching Startup Street. Now, fintech platform SalarySe has raised $11.3 million in a Series A funding round that was led by Flourish Ventures, along with others. The company plans to use these funds to further its target of reaching 100 million salaried employees in India for financial management solutions. Now, SalarySe claims its solutions, launched in partnership with top banks in India like HDFC and RBL Bank, have already seen traction among 100 plus multinational corporations, GCCs, and Indian corporates so far. For more on the company's plans ahead with this new funding, joining me now is Piyush Bagaria, the co-founder at SalarySe. Piyush, welcome to Startup Street. Thanks for your time here. You've said SalarySe aims to empower 100 million salaried workers in India. Can you break down how this new round is going to tangibly move the needle on that target that you have?
Thank you so much for having me on the show. It's a great pleasure to join you. So SalarySe has now completed a funding round, our Series A round led by Flourish Venture and SIG, and our existing investors, Peak 15 and Praviga Ventures, also participated in the round. We are on a mission to revolutionize the financial product experience for 100 million salaried users, like you said. Our core belief is that the salaried Indian is the backbone of the Indian economy, and they deserve better financial product, better control over their life, to handle day-to-day challenges of urban India. And, we will use this capital towards this, furthering this mission of ours. Our product, which was launched a couple of years back, has already seen good traction amongst, 100 plus multinational and Indian corporations. And we want to scale this base up to 1,000 corporates in the next 2 years.
Well, let me ask you, what makes your platform really any different from, what's traditionally out there in the market, traditional credit, BNPL players, in what is a very crowded fintech ecosystem? What really stands apart for you?
Sure. So SalarySe is a very differentiated business. Instead of, sort of taking the vanilla distribution approach, we reach the salaried customers by partnering with their employers. So it's a deeply integrated product wherein, the features are very different. Like, our core flagship product, credit on UPI product, is designed particularly keeping the salaried Indian in mind. Our view is it's the best sort of salaried focused product in the market today, and which is what is creating our appeal within the salaried class. Typically, if you look at any salaried Indian, especially working in sectors like IT or healthcare, and young Indian, they need products which are tailor-made for them, and this is where our specialty is.
All right. And, in terms of your plans to scale this and also how employees are responding to your model, I mean, is there some kind of ROI or retention benefits that these companies are already seeing thanks to, the kind of services SalarySe is providing?
Yes, absolutely. In fact, a lot of corporates position us as a benefit product for their employees. It has seen good traction, across different demographics. Like 70% of our users are young users between the age of 22 and 35. 35 to 40% of users on our platform are, young working women, which is a very interesting sector for us. So we're seeing good traction amongst multiple corporates. They see benefit from using SalarySe, and that's really the USP of our model, which is, the corporate, the employee, everyone is benefiting out of this differentiated model.
But in terms of product diversification, the kind of services you offer to these salaried employees, credit on UPI is something you're focusing on in a big way. But apart from that, are there new launches that that you've got lined up in the next year or so?
Yes, absolutely. So if you look at the overall financial services gamut, we have focused so far mostly on payments and credit. I think as we expand our core credit on UPI payment offerings, we will also focus on two key areas in a very big way. First, we are using artificial intelligence in a big way to, drive what we call as insights vertical, where we will give personal financial insights to the salaried Indian in a very curated and personalized manner, which is not there in India historically. Second, we will also build a lot of wealth and savings products, again, to create a complete gamut of solutions tailored for the salaried employee in India.
Okay, Piyush, let me ask you about your own financials and how those have panned out since you started, the kind of revenues you're generating, and what does profitability look like?
So we are in the scale-up phase. We now are operating at GMP of around 700 crores annually. So scaled up pretty fast.
Okay.
We're looking at, doing revenues of around $5 million in the next 12 months.
Okay, and the kind of AUM that you have currently and the targets for that going ahead?
So, we want to scale this, overall GMV on the platform from 700 crore to close to 10,000 crores in the next 1 to 2 years.
Okay. Okay, all right. Lastly, let me quickly ask you, as a fintech, on what you make of the regulatory environment. It has been tightening around some of the lenders, especially. How are you navigating this framework, and do you see it more of as a headwind or an enabler of sorts for a company like SalarySe?
For us, it has been a great enabler. I think NPCI, which is our primary regulator, has been one of the most forward-looking regulators. RBI and NPCI. Our core product is enabled by a technology which they built in a way. So we see great support from the ecosystem, from NPCI. They're very receptive to what the industry wants. I think globally also, if you compare, it's amongst one of the most forward-thinking regulators which is there.
All right, Piyush, we'll leave it at that. Thanks very much for your time here today. It was a pleasure speaking with you. Thank you.
Thank you so much.
The other big story from the startup world, Oyo has rolled back its controversial 6,000:1 bonus share plan after backlash over perceived gains for Ritesh Agarwal and other promoters. Aishwarya Anand is here with all of those details. Aishwarya, take us through what you're picking up.
Oyo's parent company, Prism, has announced a major change in its upcoming bonus plan, one that aims to be simpler and more inclusive for all shareholders. Prism says it will soon roll out a new and unified bonus structure that includes all shareholders, both equity and CCPS holders, regardless of how much stock they own. The move comes after feedback from investors, as they called for transparency and equal participation. A Prism spokesperson said that the company is withdrawing its earlier resolution and will instead bring a fresh proposal for shareholder approval. Prism says this decision highlights its focus on governance, fairness, and long-term value creation. Previously, the company's bonus issue was linked to a potential IPO pathway for equity shareholders involving an opt-in process. This update follows Prism's recent decision to extend the opt-in deadline to November 9th and simplify participation terms. Back to you.
Thank you, Aishwarya, for those details. With that, it's a wrap from Ritu, Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.